Historic meltdown overnight. Markets freaked. Over $16 to $19 billion in leveraged crypto long positions were wiped out in just hours. And it all ties back to one thing: a sudden escalation between Washington and Beijing. I'm your host, and today we're breaking down exactly what happened between the US and China, what Trump said, how Beijing fired back, why crypto collapsed, and whether this historic crash might actually be a golden buying opportunity. Let's get into it. President Trump dropped a bombshell announcement, a sweeping escalation in the ongoing US-China trade tensions. He unveiled massive new tariffs on Chinese imports, in some cases doubling the previous rates, along with strict export restrictions targeting key technologies and software. The message was clear: America is tightening control over critical tech flows. China didn't sit quietly. Within hours, Beijing retaliated with new limits on exports of rare earth elements and strategic materials that are vital for global tech manufacturing. The same stuff that powers electric cars, chips, and even defense systems. That 1-2 punch sent shockwaves through global markets. Stocks dipped immediately. Risk-on assets were dumped. And crypto, always the most sensitive barometer of global risk appetite, got obliterated. But why did a trade war between two countries destroy crypto overnight? Here's the chain reaction. When geopolitical tension spikes, traders around the world go into risk-off mode. That means they dump volatile assets, buy dollars, and flee to safety. As the stock market fell, leveraged traders in crypto started facing margin calls. Those forced sales triggered liquidations. Those liquidations triggered even more liquidations, a full-blown cascade across exchanges. Algos kicked in, market makers pulled liquidity, and before you knew it, the crypto market witnessed its largest wipeout in history, between $16 and $19 billion gone in a matter of hours. It was a clean, ruthless flush of leverage. So no, this wasn't just Bitcoin falling. This was the macro world colliding head-on with the crypto world. And the message is simple: crypto doesn't live in a bubble. When Washington and Beijing go to war over trade, every risky asset bleeds. Trump's rhetoric amplified the fear. He said China has taken advantage of the US for decades and that he'll use tariffs and export bans to restore fairness. China's foreign ministry responded sharply, calling it economic coercion and warning of strong countermeasures. Markets heard that loud and clear. Traders instantly repriced risk, and the fastest way to do that is by dumping high volatility assets like Bitcoin and Ethereum. Now, let's talk about what to actually watch from here. First, derivatives data. Keep an eye on open interest and liquidation dashboards. If you see shorts piling up while funding rates flip negative, that's your signal that fear has peaked. Second, Bitcoin support zones. Analysts are eyeing the $109,000 to $110,000 range as a possible stabilization zone. If that holds, it could form the base for the next leg up. Third, headlines. Any sign of de-escalation between Washington and Beijing, or even just new negotiations, will likely spark a strong recovery rally. So what should traders and investors actually do right now? If you're leveraged, close or reduce exposure. This is not a ride-it-out situation. These liquidation storms don't care about diamond hands. They only care about who's overexposed. If you're an active trader, stay patient. Wait for the dust to settle. Let the market show a confirmed retest of support before jumping back in. Don't try to catch a falling knife. If you're a long-term believer in crypto, yes, this could be a massive buying opportunity. But do it the smart way. Dollar cost average in slowly. Scale your entries. And remember, no one times the bottom perfectly. This crash hurt, but it also reset the system. It flushed out excess leverage and gave the market a clean slate. Historically, that's when the next big leg up begins, after the weak hands are gone and the fear is maxed out. So whether this moment turns out to be the ultimate buying opportunity depends on one thing: your patience. Because when panic hits, disciplined investors always win in the long run. This dump was brutal, but it didn't break the market. It just reminded everyone that crypto is still tied to global politics, global liquidity, and human emotion. The smarter you understand that connection, the better you play this game. If you found this breakdown helpful, hit subscribe and stay tuned. We'll track the liquidation maps, the US, China headlines, and every sign of reversal in the weeks ahead. And remember, this video is for educational and informational purposes only. It is not financial advice. Always do your own research, verify the facts, and never invest money you can't afford to lose.